Hello traders, in this video we're going to learn how to identify a Elliot wave in any financial market. So we're going to dive into the market by explaining to you how you can identify a wave in any market. Okay, so before we start, I want to share this book with you guys. This is Elliot Wave Principle, Key to Market Behavior by AJ Frost and Robert. Okay, so from this book, it's a comprehensive book on Elliot Wave. Now, this book explains that a wave is a directional based movement in any financial market. And from the concept of Elliot Wave, we have basically two waves. They have the motive waves and have the corrective waves. Okay, so the motive wave are divided into 5. As you can see from this diagram here, we have an impulse wave, corrective wave, impulse wave, corrective wave, impulse wave. So all these are motive waves. And we also have the corrective wave, wave A, wave B, and wave C. That is A, B, C. All right, so now this forms a cycle. Now you should have in the back of your mind that when you zoom in into this wave like this, now you begin to see other waves inside wave 1, like 5 waves in wave 1, 3 waves in wave 2, and all that. So if I should go down to this book, we'll see exactly where he illustrates that. Exactly. So you can see it here. He'll illustrate these points here by explaining that inside the wave 1 here, we have 1, 2, 3, 4, 5, and 1, 2, 3 as wave B. So these are the fractal nature of the market. And this goes on and on and on. That's why if you identify a pattern in monthly chart or weekly chart, if you scale down to 15 minutes or 1 hour, you will see the same pattern playing out. So, and that is the advantage of learning how to trade waves, because trading waves is identifying the patterns. So the concept of identifying, the reason why we identify a wave is to identify a pattern. Okay, so if you cannot see a wave, probably most times you will not be able to see the pattern that is forming. And early Elliot wave traders, they trade the pattern. There are 2 basic methods of identifying this wave. Okay, so and before I explain that, in case if you like this book and you want to have a soft copy of this book, kindly reach out to me. I'll be glad to send you a free copy. Okay, so the first way we identify an Elliot wave is by using a trend. Okay, trend line. So we established before now that a trend line is drawn on a market that is trending. So once a market is trending, we have an impulse, we have a correction, we have an impulse, we are permitted to draw our trend line. So once this trend is broken, all the previous move becomes a wave. Okay, likewise we have here impulse, correction, impulse. We put our trend here. Once this trend is broken, all this previous wave becomes what? A wave. So from the Elliot wave perspective, we've seen that once we have an impulse and after a correction, what do you expect? We expect the next impulse to play out. Okay, so having established that, the reason why we identify a wave is for you to be able to trade the next wave. Okay, and also based on the pattern that is forming. So if you are the one that understand pattern, you know that at this end here, once the market makes an impulse, you are expecting at the end of this corrective structure, you are expecting the next wave to play out, which will be the next impulse. So an impulse, a correction, an impulse. So this is a complete structure, and then the market starts dropping. At the break of this, you have a confirmation that yes, this wave is over. So you can now treat this to be a single wave for you to have this trade play out. Likewise, we have here an impulse, a correction, an impulse. You draw your trend, extrapolate it here. As the trade breaks this trend here, you have all this to be one wave, and this is a next phase. So using a trend helps us to see a mono wave in the market. Mono as in one, that is one wave. Okay, so secondly, there are traders that uses MACD to identify a wave, but using MACD is more kind of difficult because the kind of MACD they use is 4C MACD. So what the idea is this: if you are using a MACD, they believe that for every mountain in MACD represents a wave. So most times it's not that clear, especially when you are in smaller time frame, because if you go to a bigger time frame, you will see that from here to here might be just one bar, one mountain. So that tells you that from here to here is one wave. Okay, likewise, for instance, it's clear here. You can see from here to this point is one mountain. Okay, likewise is one wave at this point. Okay, so the best thing that happens to you as an Elliot Wave trader or say wave trader is for you to know how to read patterns. So with patterns, you'll be able to see the best way to identify the wave. So having seen impulse, correction, impulse, you just draw your trend line and follow suit. At the break of it, you'll be able to identify that, okay, this is a mono wave. I should be expecting the next wave to play out. And as it's coming down, you put in your trend, expecting at the break of that trend, you're expecting the next wave to play out. Okay, so this is how we identify this trade. Now, somebody might be asking, why should we identify this trade? How will it benefit a trader? As you have seen from the Elliott Wave concept, I want you to understand this, that market makes a fractal nature in every move. Okay, so where you have an impulse, if you zoom in that impulse, you will see a corrective move. So it now boils down to you, what type of trader are you? Like if you are a day trader and you've seen an impulse in 1 hour or 4 hours, you then need to wait for a corrective move in that small time frame of 15 minutes so you can ride the wave to complete the next wave in higher time frame. For instance, if you have a wave, an impulse, a correction, an impulse, right, in a time frame, in the next time frame you have an impulse, all this becomes a correction, then you have another impulse. In another time frame, this becomes an impulse, this becomes a correction, and next becomes you have another impulse. In a bigger time frame, we have what? An impulse, and all this becomes a correction. We have next an impulse. You see how it is? So this is a fractional nature of the market. So you can keep going down to even seconds for you to identify a wave. For the fact that there is a corrective structure in between the waves. So once you be able to identify a wave here, impulse move, wait for this to complete before you now trade the next wave. So that is why identifying this wave is so important. So you'll be able to draw your trend, and at the break of it, if you've been following us, you see the best way to identify a regular flat, the best way to identify an expanding flat or a running flat. So in between here lies different patterns. So we have the triangular pattern that can play out, we have the regular flat that can play out, we have the expanding flat that can play out, and we also have the contracting flat that can play out. Okay, so we've covered that in some of our videos. You can take a look on some of the videos here. I'll be able to learn more of this. If I should draw my trend from here to here, I should draw my trend here. So what does it tell me? Two things. It tells me, for instance, number one, that the trend was established here. So we have an impulse, a correction, an impulse, a correction, an impulse. So this trend is valid until at this point is broken. So all this one becomes a wave. This previous move becomes a wave, whereby we have this and this. So once this trend is broken here, then in back of my mind, I will know that, okay, all this move now is a one wave. Then I'm expecting the next wave to play out. And that will only happen when this corrective stage is over. And that is why you start looking for the corrective pattern you recognize. And from me looking at it, I can see that this is regular flat. So at the break of this corrective structure, then we'll be able to take a trade here, expecting this one to play out, expecting what happened here to repeat himself here. And that is what Elliot is trying to achieve. that every market after a corrective stage will go to an impulsive state, and after motive is a corrective state, and after corrective state is a motive state. All right, so this is just the concept, and this is the simplest way I have learned, and anybody can learn how to identify a wave. I believe you've gotten value from this video. Now, if you like this kind of content and if you want to trade this way, okay, please don't hesitate to contact me using the detail below this video, and I'll be glad to help you to fine-tune this strategy so it can suit your personality and you'll be more right than wrong when trading the financial market. Stay blessed, subscribe, share this video with your loved ones, and see you in the next video. Thank you.